Hello, I'm Debbie Bell-Hosking for FinextraTV here at EBAday 2025 in Paris. And I'm joined by Susana Delgado, Global Head, Market Intelligence and Engagement, Swift. And we're talking about driving interoperability in a fragmented landscape. Susana, a big welcome here to EBAday 2025.
Thanks, Debbie. It's lovely to be here today.
We're talking about interoperability in a fragmented landscape. How fragmented would you say the current cross-border landscape is?
The cross-border payment landscape is extremely fragmented, more than ever before. We just look back a decade ago, it was made of banks and money transfer operators. Fast forward, and today there's multiple players coming into this space, starting by the fintechs, focusing on speed, cost efficiencies, and simplicity. The digital wallets attracting consumers and small businesses. The big techs integrating those digital wallets for handling P2P and payments at merchants. The blockchain networks are coming with strong promises in terms of instant settlement and liquidity efficiencies. And instant payment systems are going beyond their natural space, which is domestic payments, moving into interlinkages to enable for international payments for some use cases and corridors. And to this fragmentation, in terms of players, we can add a whole new dimension, which is the digital assets. CBDCs, stablecoins, tokenized assets, all of them are new forms of money that needs to be transported. So in this scenario of big fragmentation, we see a risk, which is the cost of this financial fragmentation. And there is a study raised by The Economist earlier this year in collaboration with Swift that unveils the cost of such fragmentation can lead to global GDP losses that could be as high as a 6% total loss or $6.3 trillion on an annual basis.
So you've set a scene there of fragmentation with a capital F, right? There's lots going on.
Indeed.
So what role would you say interoperability plays here?
So this fragmentation is meant to continue as consumers and businesses will expect more choice, not less. But it isn't just chaos, it's actually innovation. It's fueling competition, specialization. It's ultimately bringing choice or optionality for end users, which is really positive. Now, how do you handle all of this together is the challenge. So for a financial institution that wants to make all of these new options available to the customers, they're going to see different challenges. First, the need for technical integration, and it isn't just a single system integration. Actually, payment systems are connected to hundreds of applications across the bank, feeding information to the payment, consumer information from the payment. Second, the operational complexity of handling different options, possibly speaking different languages or following different standards. Third, the need to ensure compliance with regulatory requirements across different jurisdictions. And lastly, there's the need to ensure there's economic sustainability of handling multiple options. And this is where interoperability comes in to enable for a single orchestration with the same security levels and following the same standards for communication with each other.
And this conversation about interoperability, it's not a new one. But how would you say it's changed from what we were talking about, say, 1 or 2 years ago?
Yeah, actually, this concept of interoperability is not new. If you just think about Swift, it was created more than 50 years ago to enable for interoperability for banks to send money to each other, not being connected bilaterally across the world. But it is different now. We have many more use cases, and let me give you some examples. Sending money from a bank account into a digital wallet, from a migrant worker sending money back to their family, or from a small business in an emerging country receiving foreign investment. Or connecting an international payment with an instant payment system to land the payment and to manage the last mile very efficiently, benefiting from the instant nature of it. Or connecting a payment that starts in a CBDC in one country with a CBDC in another country, both of them built in totally different technologies. That's also possible. Or one country having CBDC and the other receiving fiat money. So it has evolved over time, and while before it was more focused on efficiencies, interoperability today is a must-have. And we're not just talking about the technical plumbing, but it's really about economic inclusion. We're trying to avoid a scenario where all these new options end up being digital islands, isolated from each other, because that would lead to the isolation of economies and the cost of fragmentation I mentioned earlier.
And you talk about this risk of isolation, but do you think we're now moving at least towards a more interoperable financial system?
Yeah, definitely we're moving towards the right direction. Ultimately, getting to true interoperability is a team sport. It requires policymakers, regulators, and the whole financial industry to row into the same direction. And there are initiatives going into that way, like the G20 roadmap to enhance cross-border payments, to make them cheaper, faster, more transparent, and inclusive. We're seeing progress into that regard. For example, when we look at speed at Swift, 90% of the payments are making it in 1 hour to the beneficiary bank. And ultimately, Swift is at the center of the financial ecosystem, providing for interoperability, no matter who's sending the money, how the money moves, where it is going, or what shape is it taking. You want to send money to a bank account? Easy. You want to send money to a digital wallet? That's possible. Wallet integrators are part of the network as well. You want to connect the payment to an instant payment system? That's possible. Think about Australia's MPP, or in Europe, the one leg out instant credit transfer scheme from the EPC. We're connecting to instant payment systems as well as RTGSs. You want to move digital assets, maybe CBDCs, tokenized assets, that's possible as well. We've been experimenting with it for the past years, and lately we released the results of the live trials to move tokenized assets for use cases including trade, FX, on-chain settlement. And it doesn't really matter what type of player, banks, fintechs, digital wallets, central banks, RTGSs, instant payment systems, blockchain networks, all of them are welcome into the Swift network, which is open, neutral, and global ecosystem to handle for interoperability across the financial world.
I'm listening to you now, Susana, and there's just so much to take on board in this discussion. I almost wish we had more time, but thank you so much for joining us here.
Thanks, Debbie. It's been my pleasure.